Hello and welcome to this EXP training video for ACCA Paper F1 Accountant in Business. Today we're going to be looking at the concept of stakeholders. So we'll be looking at stakeholders within a business. We're on chapter 2 of our Express Notes, which is on page 16. All about stakeholders. First of all, what do we mean by stakeholders? Well, stakeholders are people that have an interest in the business. People that are interested in the business. It does include shareholders, but a stakeholder also includes other categories: employees, management, staff, the general public, and so on. The categorization we've got here: three main types of stakeholders: internal, connected, and external. Nice way to remember it, think of ICE. Internal, connected, and external. So a stakeholder is a person with an interest in the business. An internal one would be an employee, management, directors, and so on. They are all internal stakeholders. A connected stakeholder is classified as a sort of source of finance, in effect. So it would include shareholders, finance providers such as banks, for example, customers, all connected shareholders. And then we have external, that includes government, the local community, and so on. Now, we've got these three main types of stakeholders: internal, connected, external. What often happens, we have conflict. We have conflict between these stakeholders because the stakeholders themselves want different things from the organization, and as a result it can end in conflict. So the example we've got in the notes here: management could want to reduce staff salaries to reduce costs and increase their own bonuses. Well, that's good news for management, they'd be happy with that. But what about staff? With their salaries being reduced, that is bad news, so there'll be a conflict about it. Mendeley prepared a matrix which helps to identify certain types of stakeholders and helps to identify what we should do with those stakeholders, and this can help to resolve any conflict. Mendeley's matrix plots a stakeholder's level of interest and a stakeholder's level of power. It's quite a simple matrix where we have low and high and low and high. So the example we've got here: if a stakeholder has got a low level of interest in the business and a low level of power, what should management do to look after that stakeholder? Well, the term used here is minimal effort. In other words, management are not going to be too concerned with a stakeholder with a low level of interest, with a low level of power. So in effect, they ignore that stakeholder. What about a stakeholder with a high level of interest and a low level of power? So in the top right-hand quadrant. Now, for example, I'm a client of my bank. I've got a bank account with my bank. What's my level of interest? Well, it's quite high. It's my bank account. What's my level of power? As an individual customer of the bank, it's pretty low. So the management of the bank, when they're looking at me as a stakeholder, what should they do? Keep informed. They don't change their strategy or anything like that. They keep informed. How does a bank keep a customer informed? By sending statements, by sending emails, letters, and so on. The next one, we've got a stakeholder with a low level of interest but a high level of power. Now, for a lot of companies, an example of a stakeholder there with a low level of interest would be, for example, the tax authorities. Most companies, the tax authorities are not overly concerned with them, but they've got a huge amount of power. So if a stakeholder's got a low level of interest and a high level of power, management should keep them satisfied. So going back to the tax authorities, they should make sure taxes are paid on time, returns are submitted, and so on. Now that leaves high level of interest, high level of power, and according to Mendeley, these are the key players, these are the key stakeholders, and that's where management should focus their time. Okay, thank you for listening. This is a very quick video just to give a quick overview of stakeholders, the concept of stakeholders, where we've got three categories: ICE, internal, connected, and external. And we also talked a bit about Mendeley's power and interest matrix. Okay, thank you very much for listening.